An overwhelming majority of traders lose money not because their strategy is bad, but because they never tested it properly before going live and risking their own money. In this video, I'm going to be breaking down what backtesting is, why it's essential, and how it can save you from blowing your next funded account. Let's start off by defining what is backtesting. Backtesting is the process of trading a strategy using historical price data to see how it would have performed in the past. Think of it like a flight simulator for traders. You fly your strategy through past charts to see how it would have done, to see if it's worth taking into real time. Now that we know what backtesting is, how do we do it? The first step is choosing a strategy you want to test. For example, let's say you want to hop on the 4-hour time frame, analyze the 4-hour trend, go down to the 1 hour, look for a break of structure, and enter off of the break of structure on the 1 hour that's in accordance with the 4-hour trend. Now, this is just an example of a strategy. Don't go and take this and start using it live, but you could backtest it. Never know. Maybe that's a profitable strategy that I just gave you. But now that you have your strategy you want to test, you have to go back in time on the charts. You can do this by using tools like TradingView, or Go Charting is also a free alternative that I used before I had TradingView Premium. I can make another whole video on how I do this and show you guys how to use both of these platforms. Let me know in the comments below if that's a video you'd like to see. Most importantly, you have to follow your rules that you've set. Deviating from them will skew your data and render the entire process of backtesting completely useless. Even if you're backtesting and halfway through you notice that you made a mistake on one of the rules, or there's a better rule that you should have done, you have to keep going through your backtesting, because at the end of the day, you don't know what the end of the data will look like, and right now it may not look profitable, but after another 50 trades, the strategy may render profitable. So don't go just yet, and always finish your backtesting before changing any rules. Lastly, log each and every trade, whether it's on a spreadsheet. I like using a Notion database, whatever you want to use. It depends on the strategy for what kind of data you should be collecting, but the bare minimum is the asset you're trading. So if you're trading Forex, your USD, crypto, BTC USD, maybe you're trading stocks, whatever. Date and time that you entered and exit. Win or loss, direction, so if it was a long or a short, and I like to attach an image of the trade for later reference. Now, why should you backtest? First of all, it's a huge confidence booster when you're trading live. You'll trust your system a lot more because you've seen it work over 100+ trades, and you know that it's a profitable system, and as long as you follow it, you will make money with it. Secondly, it reveals your true edge in the market. You'll know your exact win rate, your average risk reward, your max drawdown, and your profitability over time. This also goes back to our last point, giving us a lot more confidence when trading live. Thirdly, it prevents emotional trading. If you make your backtesting completely objective, and if it hits it, you enter, and if it doesn't hit your criteria, you don't enter, it leaves a lot of emotions off of the charts. And this is super important for us traders because emotions can kill your trading. Fourthly, it helps you really filter and improve your strategy. You'll find out that maybe on CPI news days, it's not so good for you to trade your strategy and you should avoid those entirely. That's something that you would have never known if you just kept live trading and never went back into the past and started testing it. And lastly, and probably most importantly, it saves you money. It's better to lose fake trades on historical data than real money in real time. Now let's go over some common mistakes. First of all, cherry picking wins instead of following the rules strictly. This can also be known as look ahead bias. Now, you will be trading past data, which means the future data is already available, which isn't true when we're live trading. And it could be tempting to look at the future data because it'll tell you whether the trade is actually going to hit or not. And let's be honest, even though we're just testing a strategy to see if it works, everybody wants it to be profitable because that means making money. So you have to avoid from doing this because, again, this will completely skew your data and render the entire strategy useless. Secondly, the one that I see a lot is not doing enough trades. 50 to 100 is nowhere near enough. And if you're doing anywhere less than 50, you should restart, probably even quit from trading. I do at least 300 trades for any alters in my strategy. If it's a brand new strategy, maybe 100. If you only trade one asset, probably 100 will do. But for me, I trade 3 different Forex pairs, so I do at least 300 back tests for any strategy that I trade. Another common mistake that we tapped on earlier in this video is changing your rules midway during the test. It may be tempting because you see that you made a mistake with one of your rules, or you think that this one will be better and it'll make it more profitable now that you're seeing how it's playing out, but you can't do this. This will completely skew your data. It'll destroy your strategy, and if you do this and end up using that strategy live, it won't perform how you expected it to because you essentially lied in your backtesting. Fourthly, a lot of people ignore their drawdowns and your average losing streak length. If a strategy is profitable but it also has an average losing streak of maybe 9 trades, that's something that you have to take into account. That if you're trading on a funded account and you're risking 1% per trade and your drawdown is 6%, you can see how that can pretty easily knock you out even if you have a profitable strategy. So you have to pay attention to those 2 points. And lastly is being too optimistic with your slippage and spread assumptions. Now, all of our brokers take fees. If you have a broker that doesn't take fees, let me know. I'm trying to hop on. But for the rest of us, pretty much everyone either has slippage or spread fees, and you have to take these into account. I like to allot at least 0.1 of expected value to spread and slippage because that gives me a little bit more of a cushion for where I can make mistakes. And let's say I have a strategy that has 0.4 EV and I assume that it has 0.3 to account for slippage and spread. Now when I trade it live, I'll be surprised and I'll probably get like an 0.35 or 0.38. It's just good to be a little bit conservative with this estimate because you don't want it to hit you hard and notice that your strategy is actually unprofitable because you didn't account for it. Now, what has been my experience with backtesting? When I first started trading, I wasn't backtesting either. I was trying to perfectly replicate the strategies that I saw online or from other traders, and I assumed that since it was profitable for them, if I do the same thing, it'll be profitable for me. But sadly, that's not the case. It'd be really easy if it was, but it's not. I started backtesting because it is the perfect way to breed confidence into your edge and develop a strategy that is a perfect reflection of who you are as a trader. Now, even if something as small as switching from a 2 take profit system to a 3, I backtest it for hours because if you change things without backtesting it, you are slowly digging yourself deeper into the hole that is unprofitability and you won't even know it. Alright guys, this was a quick video. I just wanted to bring this to your attention as it's something all of you should be doing to reach profitability. Comment down below if you want me to make that step-by-step tutorial that we talked about on how I backtest my own strategies. With that being said, thank you for watching. I will see you guys in the next one.